All right. So Monday again. It's the 6th of April. We're doing our weekly market call with me. We got Chinwei, we got Daniel, we got Scott, we got Kenneth. These guys will be sharing their views on the market and what's been happening and what's likely to happen. I'll be giving my tips and bits and pieces through the session as well. We've got quite a number of students here who are coming from all around the world listening in on this. Please, if you have any questions, leave it in the chat. Once I take note of it, I will answer them as I see them coming up. This is the part 2 of our session. I just had a session at 11 a.m. just then talking about the Aussie dollar and the Kiwi dollar. So I'll be doing a daily session on different currency pairs for all my students, only for all my students. These weekly videos will go up online as well. Let's start off now as we see more people filter in. I hope you can share your video so that I can see some faces. I don't just see names there. I see some faces as well. Let's start with Kenneth. You gotta unmute yourself, by the way.
Okay. Hi, everybody. Kenneth here. Okay, I'd like to share what happened last week. So there have only two major news that had already happened. There's one of the things, the oil price, and the other one is the very terrible US employment figures. So let me talk about the oil price. So last Thursday, like the President Trump said that he spoke to the Russian president and the Saudi crown prince to be cutting cutting bad oil production. So he expects both countries to announce a 10 million barrel cut in oil production. So shortly after, Saudi Arabia called for an urgent meeting for OPEC group and other current countries with the purpose of reaching an agreement to restore a desired balance of the oil market. So during this session, let me try to share my screen. Yeah.
Yep.
So as you see during this time, this is the whole week over here, and US kept like a plunge. So from here on the H4 chart, you can't really see any movement right now. So plunge to 136 during the first hour from the release of the announcement. But I also take a look at this WTI USD where they have a correlation with this US CAD, and during last week it went up from about 22 up all the way up until it's trading about at 29 per barrel now. So let's move to
hang on. So
yeah.
So looking at the oil prices, climbing now. I'm actually looking for the panel. If you feel you get any points of view you want to add in, please feel free to as well. Looking at the oil prices now slowly climbing. Yesterday I shared another post about how an agreement was not likely to be reached that easily as well. Do we think that at this point oil is likely to continue moving higher, or is it likely to start coming back down again?
For my view is for the oil right now, right, is currently will be still hovering around, I think, about this level until like a real agreement, because this oil and all these commodities is all about supply and demand. So most importantly, if they are going to cut down on the production and the supply is going down to very low, right, the price will definitely increase bit by bit. But now that the oil is still quite a lot, so I don't think that there will be a very big impact right now, and a lot of people is like looking into more on the COVID-19 news instead of like looking into the oil. But I will see that it's still hovering about this level for the coming up week.
I see. So what else? How do you think this will impact the CAD?
From this CAD, right, because Canada is one of the largest like oil production over there. So if they are going to, if the oil if the oil production that is going to be cut, right, CAD will definitely will drop lah, will drop down to it will strengthen down to US CAD will be looking at coming it back down. Yeah. Mm.
Okay. I think you got a bit flip flop there. I think maybe if we're looking at oil prices dropping, we might see the CAD actually weakening further as well. So
Yes.
because there's a bit of inverse there. All right.
Yep. Correct.
So moving on.
Okay, moving on. I think on the last week, there's a US employment rate. Let me share. Yep, there's a very bad US employment rate that is on last Friday on the forest factory. So unemployment claim for the week ending on 28 March like doubled from the week ending 21st March. So unemployment rate rose by 0.9%. NFP non-farm employment change fell by 701K, the first decline since 2010. So although average hour earning increased by 0.1% and is likely due to the loss of job from the lower paid worker, which bring up the average. Moreover, as stated in the job report, employment in leisure and hospitality fell by 459. So despite the terrible employment figures, there wasn't any like big movement during the data release. So a possible reason for this may be due to the fact that the job report only covered payroll up to the week that contains March 12th, when people are still going to work, meaning more unemployment cases after the week of March 12th were not covered in the job report released last week. Yeah, so I'll be looking more into the USD currently right now will be moving. I'm looking at this index that next time maybe we'll be able to see this in Samtrade platform that I normally see this DXY for the past week. So these two lines is the past week. So I've been seeing that the US index has been moving up from about 98 points to now about 100 points. So on oncoming, I feel that you'll be still moving up, like changing of it, retracing it, continue going up.
So you think that the US dollar is likely to continue strengthening up
Yes,
towards
correct.
the 102, 103 level?
Yes, correct. About this 102 level.
In spite of the bad employment numbers or the very high unemployment claims.
From what I see that because this DXY weight in other countries as well, while you see that even that in US the market is doing bad, but other countries is doing even worse than this US. So moreover, this what I see that this continue also be going up to about 102 level.
Right. So that's exactly what we've been talking about for the past couple of weeks as well. US dollar might not be strengthening because of the economic performance. US dollar might actually be strengthening because in relation to everyone else, they seem to be doing better than everyone else. Well, everyone else is weaker than US dollar.
Yep.
So we could see the US dollar getting stronger. And also in terms of traditional sense, whenever there is such an uncertainty in terms of the virus, in terms of any other economic uncertainties, people do move towards a reserve currency, and the reserve currency is the US dollar. Right?
Yep.
That's good. Anything else to share?
No. Currently, that's all for the past week that has happened.
Okay. So Roy just shared one line where it says, based on non-economic news, US hasn't been taking enough steps to curb the spread. Still poised to think this is over optimism. I'm not going to get into the whole view of whether any government has done enough or not enough. I guess it's never enough until this whole situation is done. But we see that it's really in relation to everyone else. The US dollar, although the US economy, although it's suffering, is still doing a little bit better in relation to everyone else. Sounds good? Awesome. Now let's get Daniel on.
Okay, so hi. Let me go straight to the thing. So let me share my screen. Okay, where's the screen? Okay. Can everybody see my screen?
Yep.
Yes.
Yep.
Okay, good. Okay, so let me go to my screen itself. Okay, so straight away, let me review the call. So yes, last week I had 5 trades sent out. Itself 4 wins to 1 loss. I'll be talking about these 2 trades: the Euro Pound trades and the CAD Yen trades itself. Okay, you can ask me any questions if you like itself. Give me a minute. Let me try to see so I can see. Anyway, just give me a yell. I will not look at the chat, so give me a yell if you got any questions, and I will try to talk about it as well. Okay, so Euro Pound trade was on the 30th of March, if I'm not wrong, it's Monday itself. What happened was, I was reviewing the trades, and last week the German consumer climate fell. So I was looking at Euro being weakening. It was of a downtrend itself, 1 hour downtrend. This is a 15-minute chart. It was still below the resistance level or zone area of 0.9 itself. For the 15-minute chart itself, the MACD was down, and there's no major news coming up. Perhaps only a later part where the Germany preliminary CPI may come itself, but I didn't think it was a bigger conditions that it will move the market. So I issued a trade because it went down. It's bouncing back down, seems to be. So I decided to give a signal at selling at 0.8940. Okay, so it did went down. Okay, it did continue to go down to about 16 bips up and down itself, especially when I see these type of candles itself. I would think that they will continue to go in, but then later part it just shoot up to hit the stop loss of 0.8970 before it actually came back down itself. So this was a losing trade itself. There were some learnings I can review here after this trade itself, because I'm pretty confident of this trade actually at the Euro Pound that it will continue to go down itself. So if I went ahead to take a look at my analysis itself, the 1 hour chart, this is where I entered. Okay, you can see here, it looks as if it's bouncing off and come down, but you could see that the fast MACD and the normal MACD was still on the open. I jumped the gun a little. It looks as if it's turning the fast MACD here at the 1 hour chart. So then I went to the 15-minute, and it looks as if it was a sell, still selling. So I did sell. Okay. But on the hindsight, that if you look at it, it was not ready. It was not conditions ready to it. So I took a little bit of risk. I should have either waited. There were 2 entries I'll analyze, and usually how I send the signals sometimes on high that those won the trades was signals was the possible entry 1 here, that it really went into the zone and bounced off this zone here. You can see the white candle and the black candle here. It really bounced off, and then when you look down itself, yes, it looks as if it's really going to close in on a 1 hour chart. So that's one way I could have an early entry signal for a bigger win itself, or I could have a confirmation. That means on this candle, the closing of this candle and opening of this candle itself, you can see the fast MACD was already indicating a sell momentum on the 1 hour chart, and this could have got me on a signal, maybe perhaps for a TP2 or TP3 kind of trades. Signal trades itself. So I could have waited for confirmation. So on the hindsight, it's always on hindsight, but this kind of learnings, and I went back to review all my trades as well. These are all the kind of trades that high probability, even higher probability trades compared to this one. This is just really goes up, come down, but nevertheless, I always learn not to hesitate. Sometimes it's there's always a condition to trade, and I was taking the signal itself. So these are the few learning. This is the learning I have from the
If I can jump in there, this is one of the common problems most people face is, what I believe happened was you looked at the chart, you saw Euro Pound coming down, you saw it breaking a support level, you started bouncing off a support level, and you kind of after trading a while, you kind of get that gut feel that it was the time to sell, and I think most of us will eventually develop that gut feel as well. But what happened was, and this happens to a lot of people, is you started looking for reasons to sell rather than having the reasons tell you to sell. See, so when you're looking at a 1 hour chart, it's not ready. You didn't have the indicators, the price action didn't tell you to sell. It was just not ready to sell. So you might have went seeking, I don't know whether it was, but you might have went seeking into the smaller time frames to go, hey, look, M15 has crossed over, it's time to sell. So you're actually looking for reasons to sell rather than letting the reasons tell you to sell.
Yes.
Right. So that's actually answering Ho-Soon's question. Ho-Soon asked, does it mean that we should always refer to higher time frame chart to confirm the fast MACD indicator for trend? You don't use the MACD indicator for trend. You use it to tell you likelihood of buying or selling indications. But try to, how I look at it, I wouldn't go into the higher or into the smaller time frame to confirm. Right? I'll trade it based on the time frame that I'm looking at. If I'm looking at it on the 1 hour chart, I'll wait till the 1 hour chart tells me that it is a good time to sell, then I will sell. Right? So even using Daniel's example here, at the blue line, it's not a great time to sell because it's still not the perfect scenario to sell yet. It hasn't crossed over, the slower ones hasn't even curved yet. You might say that you're taking a little bit of risk, but try to take as little risk as possible. Look for that setup which is quite textbook, and we know that the textbook setup is going to come as well. So that green line is where I would advise most people to get into a trade rather than even the blue line, and definitely not the red line.
Yeah.
So
you're right.
Giving everyone everyone asks about how to use this trade signals that we fire out. What you have noticed is in the LCMS Traders Club private group on Facebook, we fire out now the signals with the analysis as well. So it's really a learning process where you look at a signal, you refer to a chart, and then you start learning to know whether it's a trade you should get into or whether it's something that you want to watch. Not get into yet, but watch. So for example, I think this would have been a good example. Euro Pound would have been a good trade to watch when you find out a signal for everyone to pay attention to, and then eventually get into that trade later.
Yeah.
And your next trade?
Yeah. Okay, my next trade itself. Okay, so this was on the same day itself on a CAD yen. This is one of my favorite kind of trades, although maybe not supposed to be really. But as you can see that previously last week, I think it was a Friday, Bank of Canada itself carried out a third interest rate cut. So from of 0.5% from 0.75% to 0.25%. It was a downtrend, and it just broke down, goes up, and breaking down back out of the resistance level of 76.8 itself. The fast, you can see that down here, the fast MACD seems to be almost crossing, indicating I'm going to sell. Here, you can see this line here, not yet crossing, but it was bending down itself. And the next news was the next day, GDP, CAD had a GDP. So I decided still the next day itself, there was still time to move. So I decided to issue a sell signal for CAD yen at 76.5 itself. Okay. So if you look at the 15 minute.
Sorry. Just to jump in again. Can I get everyone on who's attending right now? We got 20 over people here. Can you give me a yes or no if you actually jumped into this trade? If you followed this trade, give me a yes or a no. Oh, I know Daniel's gonna say yes because he was in it. So Louis goes yes. Howard's yes. Ah, come on, Gary. Missed it. All right. Anyone else? We've got 20 people in here. Come on, I need more responses. It's not just a listen and forget. You got to interact. Yongqin has entered so many trades, he's forgotten which trades he's got into. All right, so I want to just do a quick feedback as well. For those of you who, just a couple of you can answer. If you didn't jump into this CAD yen trade, what was one of the reasons why you didn't jump into these trades? If you feel it might be easier for you to speak, then unmute yourself and you can share your views. Okay. So Ho Sun says, because I mentioned that we should concentrate on the 9 currency pairs. Yes, good. Kenneth doesn't like the cross. All right. Anything else? Never follow. Okay. Okay. So in general, what I'm sensing is that a lot of you didn't follow this pair because of it's not one of the pairs that you watch. So this is also one of the reasons why we share these trade signals, is because we know that while you're not watching these pairs, we're also there to watch it on your behalf and to highlight to you what is likely to happen or what we think could happen. So it's something to keep you aware of, just a big highlight for you. All right, Scotty's in Euro US for the full position. Fair enough. Okay, Daniel, continue, please. Sorry.
Okay, no problem. So if you take a look at this one here right now, this is a 15-minute chart itself. This is the bar that it was entered, the candle, sorry. And then, okay, there was no reason. So I personally took this trade itself. It actually went down, all within very nicely textbook kind of trades. It continued to go down, all within the Bollinger Band of the 2 standard deviation itself until it hit TP1, 20 pips. It didn't go out massively. So there was this candle like this. So I decided to hold. Of course, there was some, and then it went all the way back up to almost the entry level. It did come back down to TP2 itself. And this is where I actually exited out at a 40 bips shafts. On the 15-minute chart, it did shoot out to the Bollinger Band itself. At the point in time, I decided to get out. But if for TP3, the first hour chart itself is still within the Bollinger Band. So if you take a look at here, this is the 1 hour chart itself, and it's actually all the while within the Bollinger Band. So for those who are still monitoring on 1 hour chart, you could have still hold it, but it was very risky because it actually went, it also was because there was a lot of movements up and down, so you could have a heart attack if you're not the type of person to hold. Okay, and then but it still went to TP3 itself, just out of the Bollinger Band of the CAD yen, and then it hit the TP3 itself. And which point I in the private chat group, our Facebook, the excuse me, LCMS Traders Club, I did indicate that just grab your profits itself, because I really don't know where it's going, because it was moving down, but this kind of movement itself seems to be fluctuating within that within 40 to 60 bips itself. So I think it's a really good time to trade and not to continue to hold anymore or extend the take profit trades itself. So overall, it's pretty good. It hit the TP3, and this is kind of charts that I do. So you can see in the 15-minute chart, it actually took a very long time before it takes a TP3. In fact, I'm not wrong. It took until the next day. It's the next day trade itself. So for me, I 40 bips, or in fact, even when it goes up and comes down back to here, you see this candle here, I would have advised most people to have taken out the trades already. Okay, so that's all for me today. You got any questions? Any more questions?
Any questions for anyone else?
Yeah.
Yes, Louis, questions. What do you mean by
What do you
within the
mean
Bollinger
by
Band?
Bollinger Band? Okay. So Bollinger Band is about volatility. Jean, you can correct me if I'm wrong.
I
Okay.
will.
So yeah. So you can still see my chart. Yes.
Yep.
Okay. Great. Okay. So let me go to that. If you can still see my chart, you can see the Bollinger Band. Bollinger Band. This is the Bollinger Band itself. This is the down here is the 2 standard deviation. Bollinger Band tells you about the volatility and the movement of the chart. And usually we will see if Jean if gone through Jean's course itself, you notice that so long it goes through the Bollinger Band, the channel, a lot of times within the channels itself, stay within the Bollinger Band, that you can still continue to hold the trade, or you know, this is okay. But there's a 95, which once it goes back out of the Bollinger Band, there's really a high chance that it will go back into the Bollinger Band. So when it goes out, that's one of the, I look at it as one of the possibility of where I exit my trades. If it goes out of the Bollinger Band, especially if, for example, it comes out very strongly, like this kind of candle or this kind of candle very strongly out itself while I'm monitoring, I most likely would have exited, whether or not it hit the TP1, TP2, TP, for example, because there is a very good chance it will go back into the Bollinger Band, and you can see here itself, it goes out, and a very good chance it will go back in all the way to the midpoint of the Bollinger Band itself. So that's one mean by Bollinger Band. I'm not sure if I answered your questions. So Jean, you want to add
No,
in?
sounds good. I've got my child prodigy trader here as well.
Oh, okay.
We're studying them young. Anything
Okay,
else?
so any more questions for anyone? Anyone else?
Okay.
Okay. So thanks a lot.
So
Let me unshare.
now on to Scott.
All right. Hello, everyone. I'll just share my screen and let's go to this one. All right. So I was going to talk about oil, but I knew someone was going to talk about oil. So I completely agree with those views as well. What I will just mention first off is just a thought on the Aussie dollar. So we have the rate decision tomorrow with the RBA. So look, I think it's a 55% consensus that they will cut, but I don't think they will. And I think it's going to be very volatile. So I'm not going to touch this trade quite yet. What I am looking for is it to hold above 60 cents. If it holds above 60 cents, that's a pretty big psychological level. And if it doesn't, and let's say the rates are held and it gets below 60 cents, I would, suggest that we could see some selling opportunities, because like you mentioned, Jin, everyone's weak. I think just the US is still the safe haven flow, and we'll see with the price action though, because the Aussie has recently hit some very low points, but as you can see, we're just seeing some signs of exhaustion here. It really hasn't shown a lot of conviction. The chat's going. Let me just bring the chat up just to see.
So Scott, actually at my 11 o'clock session just then, I was just sharing that we had a poll that we don't believe the RBA will cut rates, so they're most likely going to hold on to rates.
Yep. I agree.
But I had an inkling, the possibility or probabilities that would they introduce QE? Would they try and print a bit more money to try and stimulate the economy a bit?
I think, so you're correct. They have mentioned previously this is the floor, so they're not going any lower.
Yep.
Obviously, crazy things have happened, but it seems that there is some stability in Australia. It hasn't got completely out of control with the coronavirus, just because we're so isolated. So I think, yes, quantitative easing, it's never happened in Australia, but Governor Lowe The head of the RBA has mentioned that it's definitely a possibility. So I just thought I'd bring this up because the price action is showing signs of, exhaustion in regards to it just doesn't want to run. I mean, look at this. Look at these multiple attempts to try and get through to get to 62 cents. It hasn't worked, and it's just sort of, quantitative easing around the corner. It's, the Aussie, it's an export heavy nation. So a weaker Aussie dollar is not the end of the world for the RBA. So, because it obviously makes things more desirable for the rest of the world, and we rely on that from other nations, especially China. So I can see you can put together a case that it's more short than it is long. Like I can't, I'd like to see it strengthen, but it looks like it's just sort of run out of steam on this. It did bounce for a little bit, but it's not, to me, it's not showing much conviction, to be fair.
So
right,
I'm looking at it as a shot upwards, maybe a shot upwards with an overall downward movement again.
That's right. Like you bring up on the weekly and you can sort of see, which is what I like to do as well.
Yeah, your account's disabled, by the way. Right, that's why it's not uploading.
Oh dear. Okay, over the daily. I see. I think the servers got updated on Samtrade.
Yeah.
I am with Samtrade as well, so I need to.
Awesome.
I did see that email. But the daily works. So as you can see, guys, long-term downtrend. I mean, that's pretty telling. To be fair. All right. So that let me go to this other account here. All right. So I also with the oil catalyst, I have been looking at the USD CAD as well. Jin, I did mention this to you in the discussions we had before making the video, but I'm looking at this as well.
You got to share. You got to share that chart. I can't. We're still on the same trade.
Sorry, everyone. Let me.
Yep. No worries.
It is working. Perth internet is okay as well. Let me go back here, and then new share. Okay. All right. So I've changed it up. USD CAD now. I think the discussions from Daniel and Kenneth have been pretty comprehensive. Like we've mentioned the main things going on. Oil is really the one to talk about, and the currency that, besides trading oil, USD CAD is also a point of interest. And it's opened, fairly muted so far, but obviously the US session is really the main play here for this particular pair. It's in a range though. So just looking at that, you'd like to see some more chatter because Saudi Arabia and Russia, it seems, are not on the same page as Donald Trump. He's an optimist and he loves, spruiking the economy. But you have to, it's very much optimistic sense to think that everyone's going to get along and reduce production all at the same time and potentially give US an advantage in regards to, almost just getting their way. So you'd see Vladimir Putin, and Saudi Arabia not really. I mean, it could happen, but there was a lot of hype about everyone agreeing and reducing production. So I'll watch this carefully. If it does happen, but the markets have been irrational. So in regards to a trade setup, if we see oil strengthen, obviously that's going to help the Canadian dollar. We could see a short here. So my consensus is we don't have enough information yet, but if everyone comes to the party and cooperates, we could see, a trade short USD CAD. But I really think it's probably, we're going to see more weakening of oil. There's less demand. I just saw a stat on, air flight is down like 90%. And they use what do they use? They use jet fuel, which comes from oil. So you got to say and people are driving less, so less demand. There's going to be a surplus of supply. So you'd think really it makes sense. Safe haven flows in the US, most likely long, but it's just been so irrational. But more likely USD long is what I'm thinking. Yep. And that's it for me as well, Jin. As well, I think everyone's covered things very comprehensively as well.
That's awesome. Yeah, I mean, I'm really looking for. I posted this offer to everyone here as well. I'm looking for more people to participate in terms of sharing their views and ideas on specific charts and specific instruments as well. So now we've got, I don't want to pigeonhole Scott into Aussie dollar because he's in Australia, but we've got people looking at different currency pairs. We have everyone looking at different instruments. I'm looking for more people to share their views and on different currency pairs, and I can share my views and my tips and ideas with how to trade the different pairs as well. So everyone's been quite quiet. Any other questions to go from what we've shared so far? Nope, you're all happy. Right now, you know, there's a lot of uncertainty about where the market is heading. You know, I would really advise to keep your trades quite short term, because if not, if you try to do anything longer term, you might get stopped out by the volatility, like we saw in terms of the Daniel's Euro Pound trade as well. Just a bit of volatility gets stopped out. I also want to remind a lot of you here are students of mine who, you know, you should be on the LCMS Traders Club private group on Facebook. You know, Scott's not in there, so he'll come in soon. With that as well, one thing we're going to start doing, also now because we have a lot more time being stuck at home, you know, apart from kids running around, is I'm looking to really do a lot of one-to-one coaching with students, right? With people who are trading for themselves. You know, not just me, but we have Daniel, we have Scott, we have Kenneth, we have Chinwei, we have Jonathan, we have a whole panel of coaches here to really guide you through your trading, right? Really watch how you trade, catch up with you maybe once a month or even more often to make sure that you're trading properly. You know, you're not jumping the gun like Daniel would say, or you're not being lazy by not trading as well. This is the perfect time to trade because you're all sitting at home. So if you're interested in having I call it a bit of like an accountability coach, someone to really watch you trade, to make sure you're accountable, make sure you know you do what you're supposed to, please reach out to me and I'll get you set up with that arrangement. We've seen that the accountability has really, having an accountability coach has really rocketed a lot of students' trading performance as well. You know, I caught up with Robbie, make sure that he's on the ball. I'm always on the case with Kim Hong, making sure he's trading properly. You see he's on the leaderboards quite often now. Kenneth and Daniel get hell from me every day in the office. They're happy to be at home now, so they don't get hell from me as much.
Every day.
Yeah, so having that guy, that person to really watch you and make sure you're doing the right thing is going to be very beneficial. So if that's something that you want to achieve, please reach out to me and I'll get something sorted out for you. And this next couple of weeks will be the best time to get started as well. All right. Have you had a good session so far? Has this session been beneficial to you so far? Give me a yes on the, give me a thumbs up actually. Good thing, Roy. Give me a thumbs up if you think it's good. All right, awesome. So tomorrow at 11 o'clock, I'm going to do another short video. Tomorrow is about the Euro US dollar. It's talking about the Euro, giving you updates about how the market is going to be about the Euro. Please, I can't figure out how Facebook Live is going to work, but we'll probably go on Zoom from there. If you have any other questions, please let me know. For those of you who have not been able to stay through the whole video, this will be uploaded onto YouTube and onto Facebook in the private groups for all of you as well. In the meantime, I hope you trade safe. Don't oversize. Don't jump the gun. Try and trade your textbook setups. You know, follow your trade signals. And let me know if you get any other problems or concerns. Thank you all. Thanks, panel. Bye-bye.